Hello and welcome to this edition of Closing Trades. And on Tariff Eve, we're holding up quite okay. So yesterday seemed like much the digestion of what the global markets did on Monday, or rather Friday night. We're holding out quite okay. We're back at the 23,400 print for the Nifty futures. The breadth of the market as well has opened quite nicely. In fact, within the F&O pool, at least they're outperforming the benchmarks. About 171 is the count that you have to the greens right now. Tata Consumer, after a brokerage upgrade, which we will just flag off, 7% is the kind of move that you've seen on that stock. Zomato holding up 4.25%. Yes, it's a Nifty name now. Titan, IndusInd Bank, Trent, these are all seeing some buying coming in. On the flip side, though, there is weakness on a BEL. There's L&T, which is currently down today, and Bajaj Finance too, which is reeling under pressure. Can't see a very big move towards the private banking or high FI denominated stocks, because look at an ICICI Bank that's holding up, but it's up just 1%. HDFC Bank higher by 1%. SBI flat, Kotak flat, TCS absolutely flat. And ITC just about a whimper of a move in the green. But the broader markets, like I said, a lot more lively. Kalyan Jewellers has moved up 10%. Lodha is holding up 5%. Remember, there was a bit of a knee-jerk yesterday when you did have those ready reckoner rates which got hiked in the state of Maharashtra. And Lodha, given their dominance in the state, did take that bit of a knee-jerk. But today it's making up for all of yesterday's losses, as is Godrej Properties, which is also holding up 5% as we speak right now. But let's welcome on board our chartists and figure out which way this market is going to head. Kunal, hi, afternoon. What's the sense that you're getting right now on the markets? Are you surprised by the move today?
Yeah, a bit surprised by the move today, and because the markets were expected to be a lot more range bound, looking at the way the positions were lightening up for the index futures. But I think this is a welcome up move for both the Nifty as well as Bank Nifty. I think today's day is more about mid caps and small caps, because we've seen very strong outperformance, follow through, volume move coming out for many of the mid caps and small cap names, and yes, of course, even the tier to large cap stocks. So I believe that that's an indication that maybe the market tilt is now getting more expected towards the the other end of the markets, where there have been not too much of outperformance in the last 3 to 4 weeks of this 1800 odd point rally for the Nifty. Net, I think we are still hovering into that 23,000 base for the Nifty. We tested 23,100 approximately yesterday, and we are holding on to that 23,000, 23,100 mark as a support. So that itself indicates that the markets are going in with slight bit of more bullish expectations, into the big event.
Okay, the big event tonight must address what's happening with the global markets as well. And while Asia managed to do quite okay, led of course by the India markets, which have seen an uptick of 0.5% on the index, it was absolutely flat for Shanghai and just a whimper of a green for Nikkei, which held up by about almost just 0.2%. Europe, it's a sea of red, much unlike the move on the markets yesterday. 0.6% down for Stock 600. DAX is down over 200 points. FTSE lower by about 0.5%, and the CAC as well is soft as we speak right now, and that's pretty much the case with the FTSE MIB as well. The pre-market rates for the US futures, when we came into trade, they were largely flat, but now you're seeing a little bit of a drift lower, 0.5% lower, or rather 0.3% lower for the Nasdaq futures. S&P as well mildly soft, and the Dow as well is headed in for almost a 100-point decline. So little more nervousness when it comes to our Western counterparts, both Europe as well as the US futures so far. So we really seem to be the global outperformers today. But yeah, Nikunj is also here. I guess Nikunj shouldn't be macho and try and predict what's going to happen tonight. Let's wait for the event and then take a call, I guess.
See, Asha, there's a universal feeling that it's toss of a coin, like it's a binary event. If tariffs come, markets would have a panic reaction if tariffs are not on expected lines, and if tariffs are less, then markets will start doing cartwheels. I don't think it's going to be that simple. My sense is, looking at what the pattern has been, Donald Trump took over in January, and after that, if you really look at how there has been this back and forth on every major tariff announcement which has come out so far, to assume that tomorrow we will get everything in terms of where the tariff is headed would be impossible. It's a very complicated issue which requires a lot of deliberation. So imagine that all categories, every country, and everything is going to be out tomorrow morning. I think it's a stretch of imagination. Some concrete Direction will come out. Maybe some indication as to which categories and which countries would perhaps attract tariff. But a lot would actually be coming out later. And also, there is no guarantee that what comes out tomorrow may not be rolled back. We've seen several tariffs which have come out, they've been rolled back, but a lot of back and forth has happened. You know, look at autos, look at what's happened to tariff on Canada, look at metals, all these tariffs have been rolled back. So if you work with a logical assumption, I don't think you will get a complete picture tomorrow. It would be like a 50-50, half-half, a direction, but some pending announcements. If it comes through also, let's assume, then what are markets expecting? Markets know tariff is coming, and what is that watermark number? I would say the watermark number is about 25%. In autos, if 25% has come, it's certainly not going to be more than that, because auto is a very sensitive category. If anything is in line between 20 to 25%, Kunal, Aisha, all of us know that it was coming. So markets would say, chalo, aa gaya. Let's move on. Right. Third is if something really different comes, which is that there is something else, more like a bolt out of the blue, I don't think markets are prepared for that. Anything which is routine, anything which is in line with what media has been discussing, what we've been flagging off, that should not have an impact. Also, from an India standpoint, think about it. What Canada and Mexico did, they retaliated to what US did. India has already gone and perhaps made a proposal that, okay, let's talk. You know, we bring tariff down on few items, you don't slap high tariffs on us. Let's make it business. Let's be friends rather than foes. Let's not make this a war. And let's try and complement each other, which means India positioning is much better than what other countries got in terms of a raw deal. So the Trump administration has called India as tariff king or tariff master, but reality is that we've been very proactive in trying to really find a middle path.
Yeah, absolutely. And I mean, truth be told, that knee-jerk reaction from 21st Jan when Trump took oath in the office for the second time, most of the world markets have already seen a reaction and absorbed that first leg of reaction to the tariff implementation in any case. So I don't know if we can really bring up the charts for what the US equity markets and for what our markets have done. A large part of that damage, or the first knee-jerk at least, is already in the price. But as the countdown now begins for the US tariff announcement tonight, India is already gearing up to deepen its strategic and economic ties with Washington. ET now has learned that defense and aerospace are emerging as key focus sectors in the ongoing trade negotiations. Samir Dikshit, my colleague, is here with more details on what he's picking up.
Amid the ongoing trade negotiations with the US, one sector which is going to have a big focus is defense and aerospace. Sources have indicated that Indian government is likely to provide more policy support and open doors for American firms, especially in the space of defense and aerospace in India. And that is the reason, if you see, the players like Boeing, Rolls-Royce or even Collins Aerospace, these are American firms which are looking to expand global footprints and have a strong presence in Indian market as well. In the reverse side, if you see, India is also looking to further strengthen its aviation or the aerospace ecosystem. So it is more like a win-win situation from both the sides, and that is the reason that Indian government is pushing for opening of doors in the aerospace sectors. Currently, if you see, Boeing is having a global outsourcing from India over $1 billion, and they are looking to make it to double, to cross $2 billion by next 5 to 7 years. Even Collins Aerospace, they have invested around $200 million in R&D space in India, and they are looking to increase it manifolds in next 5 years. Also, Rolls-Royce, they are expanding their footprints in India. India is also looking to become a manufacturing hub, have a capability to manufacture a commercial aircraft, and for the same, for this big ambition, they are looking to have some sort of partnership with American players. So the larger picture indicates that aerospace is the sector where we can see more of American firms' participation, and India also looking to open doors by providing more sort of policy support.
Sinha Roy, Chief Equity and Fund Manager with ICICI Prudential Life, joins us. I haven't actually interacted with him in a while. Kaise ho Gautam bhai? Long time.
Long time indeed. Nikunj, how are you?
All
Good to
well,
speak
all
to you.
well, all well. So nice to have you back.
Yes. Likewise.
We had excesses in the market, which got checked and corrected in the month of March. What should we expect now? Now that things are improving on the macro front, on the micro front, and also things have improved on the valuation front.
Yeah. So absolutely, Nikunj, we are somewhere mid-cycle in this correction. Valuations after the correction are quite reasonable, especially in large caps. And earnings is also, earnings cycle is also midway. So hopefully H2 should see some earnings pickup. So I think for a long-term investor, this is a very decent time to deploy money in equity markets, especially with a large cap orientation, I would say. And for volatility, you can also use the balance advantage kind of strategies because markets are likely to be volatile, and the volatility is largely because of the macro reasons that we were discussing just before we started this.
Okay. Everyone is saying that the momentum is broken. Small and mid cap stock, the party is over. But then when I look at flows into the market, SIP flows or flows into the small and the mid cap stocks also, no one's panicking. So can we say that the trend is broken? Can we say the sentiment has changed? Yes, prices have changed, but the commitment is still the same.
So honestly, this is a much anticipated valuation correction, A, and there's also a cyclical correction in earnings. Earnings were at an elevated level, and they have been reverting. So to say that growth is disappearing, I don't think we should take that stance right now. I think we should wait and watch. There should be a cyclical recovery in growth towards H2 of FY26, especially as the monetary boost comes through, right? Monetary boost has already started coming through, be it through liquidity or interest rate cuts, which have begun. So as that cycle plays out, that will have a significant, impact, especially on discretionary consumption in H2, is what we believe.
Hi, afternoon. So everyone's wondering what the portfolio tilt is should be like. March has seen a decent rebound, but are we out of the woods? And what sectors and how much exposure should one have now?
I think from a portfolio tilt perspective, it would be a very consensus choice. I'm sure even for me, it would be financials, and that would be the lending institutions and including insurance, because valuations are most supportive in that part of the universe. And also the growth improvement, when it plays through, that should benefit the earnings of these companies the most. The delta in earnings should be the highest in these kind of companies. So financials will be our number one choice in terms of asset allocation at this point.
I'm just looking at the surge in the market in last 10-15 minutes, and it's not bad actually. So Kunal, that cycle starts again. Gautam, I'm just coming right to you, but I've got a lot of viewers or traders also. They want to know क्या करने का फटाफट. SIP तो है, पर Kunal will tell us what to do next. Kunal, what would you do now? I mean, take a trade, a long trade, and assume that tomorrow you'll get a better exit because of tariff.
Yeah, so I think stock specific, there are a lot many stocks which could probably be unaffected by this kind of a event as such. For example, the OMC stocks, you've seen IOC, BPCL, HPCL, they've been looking attractive. The insurance space, you've seen many of the stocks going into a very big breakout. NBFC pocket, there are many stocks which are heading towards a very big breakout, not just the likes of Bajaj Finance, Finserv, but even the tier 2 end or the mid cap and the NBFC pocket, which have started to look attractive. The PSU banking lot, there has been a lot many stocks which are heading towards a 200 DMA breakout as well as an individual breakout. So I think the markets are looking out for much more wider opportunities in this phase.
Okay, wider opportunities. Well, of course, financials seems to be the top draw. There are many other sectors which are also looking attractive. Look at Tata Consumer Products. The way that's shot up today, Goldman Sachs has upgraded it to a buy. They've upped the target price also now to 1,200 from the earlier 1,040. They're saying that they're poised for a strong EPS growth over FY25 to 27, and that they expect strong recovery of tea margins with price hikes as well bundled into that. Tata Consumer now up 7.5%. Gautam, what's the sense that you're getting about FMCG? Sure enough, some of these stocks have actually rebounded from their 52-week lows. But the entire theory about the slowdown in the rural did hit them hard. Who do you think is going to emerge the winner from entire staples basket?
So FMCG, honestly, Asha, the demand recovery is still not happening. Let's be very honest about it. So it's wait and watch. Some triggers like the income tax benefits which are coming through are there. Monsoons are likely to be early days yet, but monsoons are likely to be good this year. Otherwise, the agri sector is coming out of a long drawn, post-COVID lull period. So one should hope for a more cyclical recovery in FY26. I would draw the example of two-wheelers here, where also we had seen something similar. Post-COVID, you had a long-drawn lull there also, and then suddenly there was a bit of a recovery. So something similar cannot be ruled out in FMCG. The other aspect is if you look at valuations, this is one sector which had challenging valuations for a very long time. But after a very long period of time correction, this is looking attractive. So yes, there is no visibility of growth per se right now, but this could be a very good contra idea to start biting into from a later half of FY26 perspective is the way I would approach it.
Your sense too, contra idea, or would you go by breakouts that you're having today on, say, a Tata Consumer?
No, I think there are a lot many stocks which are actually showing signs of evidence of a breakout as well as a potential turnaround. So, it's a matter of time when the market gets back its zone of confidence. The underperforming sectors, and we are talking of large cap names over here, which are many of them are part of the Nifty 50 basket also. So I think the three sectors which have been underperforming, IT index of course has been a sharp underperformer, FMCG as well as auto. And I strongly sense that there are many stocks which are heading towards a breakout for themselves. You've seen Marico, for example, a stock which has corrected the least from the entire FMCG pack. That's a stock which is showing signs of strength. Tata Consumers after today's breakout, 200-day moving average breakout, as well as a very big gap breakout for Tata Consumers looks attractive for potentially another 10% on the upside. So there is bound to be a catch-up which should be playing out for many of the other names, and especially the likes of HUL, Britannia, which have been not showing any major signs of recovery. So my sense is that the entire basket should pick up from here on. Buying into the FMCG pocket is something which I would believe could be a decent trade for the next 3 to 6 months.
Okay. Meantime, look out for Bharti Airtel as well. They've expanded their Nokia partnership to enhance the 5G network. The shares, of course, are holding up today. And also remember, this has been one of those very strong and resilient stocks in the market correction as well that lasted up until March. This was one stock which actually stood ground and still holding up at 1755 odd levels. Also, Antique has picked Chalet Hotels as its top bet in the hospitality sector. For a strong Q4 is what they're positioned to post right now. Chalet Hotels holding up 2.25% as we speak right now. Let's see what IHCL as well is up to, Indian Hotels that is, and how that stock is performing currently. And then, of course, the entire pool, that comes with travel and hospitality. The best pick off the lot, Interglobe Aviation. Let's see what that stock as well is doing, given its monopoly within the aviation space. And I would be interested to see what GMR Airports as well is up to, considering the passenger traffic has only seen an uptick on a month-on-month basis. What is your own sense, Gautam, on how this entire travel boom should be capitalized in on? Should it be via some of these platform plays like an Ixigo, etc., or should it be via hotels, aviation, airports, or should it be a basket of all?
Asha, luckily this has been one huge turnaround in terms of the profit pool shaping up post-COVID. The entire travel sector, as you rightly mentioned, that would include hotels and airlines and other platform companies which are aiding them. So we are honestly not seeing any signs of slowdown. We are on the lookout for signals of a cyclical peak out here, but they have not come yet. So while we were early investors in all these companies, we stay invested. We are not very excited incremental buyers because ultimately the cycle has to set in. But when you think of a cycle in this sector, there are two angles. One is demand, which is holding up. The other is the supply side. So I don't think supply side risks are really coming into these sectors. And even other sectors which have done well, cyclical sectors which have done well post-COVID, which are driven by supply coming in, like real estate and hospitals, there we are not seeing signs of peaking out yet. But of course, we are very aware of the fact that a lot has happened. Huge delta has happened in terms of market cap and in terms of profit. So it's not like we are very, very excited in terms of deploying fresh capital, but remaining invested in many of these keeping asset-heavy cyclical models that we are talking.
This is what Tata Motors is up to and how that's been absorbing its monthly sales data. Of course, the most impressive of the lot was M&M tractor sales, and what you heard from Aisha Ari, those were some impressive numbers. Tata Motors is just about quiet right now, and Hyundai as well, wherein their March sales were higher than estimates, led by the SUV segment. Gautam, how do you bifurcate now between the auto plays and the four-wheelers? Let's restrict ourselves to that.
So yeah, auto, we have been actually for 3-4 months in a more tepid kind of growth environment, which is fine because four-wheelers have seen a good cycle before that. Not a great one, but a good one. But within that, we are clearly seeing winners emerging in this cycle, which are very different from what would have happened in a pre-COVID four-wheeler cycle. So we are staying with the winners because it's very clear who the winners are in this cycle, and there have been some changes in that too, the pecking order. But right now, it's pretty clear. Even in two-wheelers, we are seeing something similar happening. Some clear winners have coming out. So while the overall situation in auto is tepid only from a growth perspective, but there are winners within that pack that one needs to be remain invested in, I would believe.
I'll go back to one more important aspect, which is what is happening in the IPO market. And in the month of March, there has been almost like a famine, almost a dry patch of IPOs. And that is something which is very, very crucial for us to, market for our viewers. That look, see, why were markets, where was the supply in the market coming from? See, demand was coming from SIPs, supply was coming from FIs, supply was coming from promoters, and supplies was coming from the IPO route. So three sources of supply have suddenly dried up, which is FIs have been coming back and going, IPOs have dried up, and promoters have stopped selling. So these are technical factors which really would be at play. Okay. So Gautam, I go back to that large point again, which is that there were a lot of these narrative themes in the market. Made in India, move out of China to India, made in India for the world, Atmanirbhar Bharat, chemical, EV, e-commerce. Where do you think the storytelling is real, and where do you think the storytelling is still unreal?
That's a very valid question, because actually behind every story, there is a successful company, there's a successful stock. And honestly, our job as fund managers, stock pickers, is to find that one company which is going to really make it big, right? If you think about Make in India, are there winners? Yes, there are winners, but it's not like every company which is talking about Make in India is going to be a winner. So especially when the tire hits the road in situations where you get a reality check like what's happening today, which is not a frenzy, you get to know which is the winner, and you have better stick with them because the others can fall through the roof very easily. So that is a lesson that market teaches again and again, and this cycle is no different. So don't completely avoid things is what I would say, but don't completely buy into them blindly also, because that will result in disasters in terms of stock picking. The core job of finding that those great companies in the early stages is what is the most important thing. And thankfully, because of these things, especially the Make in India manufacturing thing, we had a couple of good companies emerging, be it in discrete manufacturing, electronics, or be it in chemicals. So as a country, we should be happy about it. And the market caps have gone up a lot in these companies too. I'd also like to touch upon that point about supply briefly. See, the supply did set a cap on the market. So we should not forget that the supply is not completely price inelastic. It depends on the price that is there available. So supply will again come back if the prices are good. So we should not forget that. I think another large IPO should be in the pipeline sooner than later. That is going to be the construct of the market, especially if the market continues to see a lot of liquidity coming in and remains expensive.
Okay, Gautam, so good to have you on the show. Thanks for your time today.
Thank you.
Okay, holding on to the gains, so far so good. Let's take a very quick break. When we come back, the last 35 minutes of trade this afternoon.
In conversation with Shrikant Chauhan, Kunal Botra, and everybody is counting down to the tariff. Tomorrow morning, the tariff impact. Kunal, is this a binary event like a Brexit, like election, or this is just a 100 point, 200 point swing event? I mean, today everybody is talking about it. By tomorrow, this time, we will stop talking about it. But the swing events like a Brexit or a budget or let's say elections, they normally give you a time to a lot of, a chance to trade. Do you see that level of volatility tomorrow because of this event?
Not really, Nikunj. In fact, the factors which we are looking out for, the way the markets are entering into this event is a lot more different than what I think the markets were maybe a month back, because there was a lot of trepidation at that point of time. Right now, with this recovery, the markets have shown the drop in the India VIX, literally no movement in the India VIX in the last 4 to 5 days. We're stuck at almost 13.5 to 14 range for the India VIX. So that itself indicates that the markets are going through a much more calmer set this time around. That means that, and even for example, a day like yesterday where the index was down 300 odd points, and to try and counter that and not have a follow through downtake, you're up 100, 150 odd points on the index in the next following up day. So that indicates that the markets are trying to just about settle into a range. I would probably believe that this could be a maybe at max a 2% swing up, swing down move for the index. But once that is out, what this could do is this could open up a lot of sectors as well as stock themes, to try and play in terms of catching the next trend.
Well, today, of course, you've got a Kalyan Jewellers, which is seeing quite a mighty move, about almost a 10% uptick on that stock. Tata Consumer, like we highlighted, after that Goldman Sachs upgrade, looking quite smart. And Lodha and Godrej Properties have made quite a move up, pretty much undoing all of yesterday's knee-jerk reaction once Maharashtra upped the ready reckoner rates by 10%. Shrikant, what's your reading on the charts of some of these realty plays? And let's talk about Lodha and Godrej. What do you see now?
Yeah, good afternoon, everyone. See, like for real estate stocks, most of these stocks are very close to their important support levels. And in this particular sell-off, we saw these stocks were forming some higher bottom as compared to their previous lows, which they made in the month of January. So I am of the view that specifically, if we go through with Macrotech or Lodha Developers, then it is very close to its long-term support. Today it has formed reversal formation, and entire formation is also suggesting us that the stock is heading for at least 1350 sort of levels in next maybe a few days or weeks. So it will take some time, but it's a positional trade to buy at current levels. It is at 1220 currently. And if we go through with the DLF or Godrej Properties, then there also, if we see the formation, then it is more or less similar. But in that, Godrej Properties is forming some rounding bottom sort of formation. So it will take some more time as compared to DLF or Macrotech to participate in this up move.
In fact, the real estate index has fallen one of the highest in terms of a sectoral average. But I will not read too much into it. I'll tell you why. Because you take DLF and Prestige out, and if they fall 10%, you don't have anything large to look forward to there. Are markets generally turning? I mean, I always look at leadership, and if leadership turns, then I would say that, okay, this market is genuinely turning then. Kunal, can I look at, let's say, a Zomato, or can I look at, let's say, some of the defense names and say that when they start coming back, for me, it is the real leadership market. That means that clear leadership is coming back.
Yeah, so there are a lot of sectors. PSUs, for example, PSU Defense, they've done reasonably well, Nikunj. In fact, it started off with BEL looking attractive, followed by Mazagon Dock, which gave a breakout, and then the other stocks like GRSE, Cochin Shipyard, they had a fantastic uptrend. And then in the last leg of the price up move, you've seen HAL being one of the star performers in the entire defense pack. So that's one pocket which I would believe is looking quite strong. And when you see synchronized price action, one stock identified as leader, and then the other stocks that try and play a catch up, and then eventually you have a new set of leaders emerging, that's generally an indication that the sector is back into its move, and we expect that this could be a trending move for the sector. So defense is one of the pockets which I strongly believe that should see a decent upside from a current level perspective. Also, Zomato on the other hand, I think after almost 4 attempts towards the 200 mark, I think there was just 1 or 2 days when the stock had fallen below the 200 levels. But we've seen that time and again the stock retesting the levels of 200 is seeing a short covering bounce. The only concern with a stock like Zomato when we look at the chart is that in every attempt towards the stock hitting the 200 levels, the highs the stock has been making post that have been on the lower side. So it's been making pattern of lower highs and almost similar lows for the stock. So we need to see a breakout about 220 levels for Zomato, 222 to be precise. Once we see that happening for Zomato, then we can expect that this could be a potential turnaround candidate as well.
You've been bullish on Jio for a while, right? And jata hi nahi upar.
No, I think maybe a one-off day for the stock today is not moving, but otherwise it's a very strong chart.
Jio, no, I'm just saying that where it was. 340.
No, Jio I've been bullish recently only.
Naresh was bullish, is it? Yes. Somebody was bullish. I don't understand the business model, so I'll never be bullish. Somebody was bullish.
AB Capital is something which I've been bullish on.
Yeah, how's that doing?
That's so far very well. In fact, it's up almost 20% in the recent 1 month.
From the recent low.
Yes.
Okay. Pashupati Advani, hello sir.
Namaste, sir. Happy New Year. Happy
New Year.
Indian New Year.
Oh, you've started celebrating financial year also. I didn't know this.
Why not? Why not? Let's start from zero. We'll all be a lot happier.
Right,
on
right,
April 1st.
Right. Will Donald Trump make it zero for everybody tomorrow by announcing higher tariffs?
The world is going to gang up against America, but who knows? I mean, he wants his pound of flesh. He's going to succeed with some countries. He's not going to succeed in others. The Canadians have already started like putting all sorts of nonsense against the US. So let's see. And that's really their backyard.
Shrikant, what is the best case scenario for the Bank Nifty and the Nifty in the month of April? Because by tomorrow same time, hopefully the event risk would be behind us. So Shrikant, what is the best trade ahead of the event for the month of April, both for the Nifty and the Bank Nifty?
In the month of March, Nikunj, we saw a spectacular rally from the lower levels, 21,800 to 23,800 in just 13-14 days, which clearly indicates that there was like specific buying interest in the market. And now whatever that we are seeing correction of last 5-6 days, it's a corrective pattern to the previous rally. And today when there was like a real panic sort of situation in the market and there is a major event, the market has not broken the previous low of 23,130, which the market has made on Tuesday. So I am of the view that we should look for creating some long bets at current levels with a stop loss at 23,100. I am of the view that the market is going to surpass the immediate highest level of 23,850. So currently we are into corrective pattern and again we are going to surpass the previous high. That's my overall view on the market. And we should look for creating long bets.
Okay, that's the Nifty as well as the Nifty Bank and how they're both stacking up. But Pashupati, just analyzing what today could transpire as, do you sense that there's going to be just a very quick reaction and a swift one from the equity markets? Or do you think something as large as country-wise tariff implementation is something which is going to take time to digest for equity markets and even for the dollar to find its feet?
Well, I think what's happening is there has been uncertainty based on where are the tariffs coming and on what they are coming. And, so once they announce what specifically they want to charge, whether it's companies, whether it's countries, whether it's sectors, it's still a big blob right now. So, the reality of the matter is that we're going to know and then we're going to react. And depending on, is India better than, Bangladesh or is India better than Vietnam, we'll find out. And I think that will basically make the markets go forward or backward. I think the US markets are in for a bit of a negative simply because tariffs means higher prices and the US looks like it's kind of going into recession. It'll take a few months, but it doesn't look very good over there in their economy.
Okay, in fact, we had pretty much the top global voices just this morning. Krishna Mimani, CIO at Lafayette College, who says that uncertainty will loom for extended period of time post the announcements as well tonight. Also spoke with Jahangir Aziz on how he thinks the reciprocal tariffs are going to play out. And then, of course, we also had Rashi Talwar Bhatia joining in from Ashwar Investment Management as well, who gives her take on what she thinks is going to be the impact on the Indian markets specifically.
Well, so the uncertainty with respect to the tariff situation has been with us for quite some time, and it's probably going to be with us for an extended period of time. I don't think on April 2nd, all of a sudden we'll learn something that'll change the dynamics in a meaningful way. Having said that, I think there are two aspects to tariffs. One is the uncertainty that it creates in the US economy. And if you look at any of the survey data, it clearly tells you that the level of uncertainty is probably the highest that it has been in almost 10, 15 years, with the exception of the COVID episode. And the other interesting thing is, to some extent, it is self-inflicted. That is, it is because of the policy choices that the administration is delivering on. So the uncertainty is real. Uncertainty will have an impact on U.S. growth prospects, and therefore it'll have an impact on U.S. profitability and U.S. equities in a meaningful way.
We're looking at, various variations of this. So one of them obviously is that it just matches the reciprocal tariffs, in which case the countries that will be most affected are countries like India and Brazil, who have very large tariffs differential with the US. But I think at the same time, there is a sense that the reciprocal tariffs will not just be about tariffs differential, but it will also include what the US administration calls non-tariff barriers. They're also looking at specific tariffs to be imposed on semiconductors, pharmaceuticals, and autos globally, which will probably come in a couple of weeks. India is not, most likely will not be spared from the reciprocal tariffs, and even if it's spared from the reciprocal tariffs, there are other tariffs that are coming in terms of sectoral tariffs. So clearly, one has to see what is going to happen to India.
We are mainly a domestic economy. We do have some exports and some interface with the global world, but it is not as much as, let's say, a lot of other economies, right? So from a domestic perspective, for the next 2 years still, you can very well say that a lot of the growth is going to be driven by the domestic economy. Therefore, it is very important what happens to the Indian consumer, what happens to credit growth in India. 60% of your GDP still comes from consumers, consumption. So I think from that perspective, I'm no expert on the US, but all the noise on tariffs, all the noise on everything, I think, at least as far as I'm concerned, we will know tomorrow, one way or the other. Hopefully, there is some clarity to all the noise on that front. And really, that's when we'll factor it in and move on, whichever way we have to. It's the uncertainty that is more painful than the actual reality of what comes in, because then you can factor it in and move on.
Kunal, sometimes it's time to think contra. So let's say metals, pharma, autos. Is it time to think contra, which is that, okay, go with a long position and get out tomorrow? Is there a cute trade there?
Yeah, I think metals definitely yes.
Long metals?
Long metals.
Long pharma?
Selectively.
Okay.
Like not the entire basket of pharma stocks, because there's still a lot of struggle in the pharma space. You have likes of Lupin, Cipla, they're still struggling. Sun Pharma is recovered. Dr. Reddy is on its own trend on the downside. DV Slab is also very inconsistent in terms of price trends. So it's very, very specific in terms of pharma pocket. But for metals, I'll be very bullish. In fact, it started off with JSW Steel and Tata Steel looking extremely strong right from the start of this calendar year, from Jan 2025, where these stocks moved up, I think, by 25% kind of a margin from their previous major lows. And then followed up by the likes of JSPL, Hindalco. They've managed to look attractive. Vedanta has come back to that 460, 470 range, potentially a big breakout on the monthly charts. SAIL has recovered from 105, 110 range to now almost on the verge of breaking 120 plus levels. So again, a space which looks attractive. Many of the stocks have established themselves as leaders. They've managed to make a strong comeback. And I strongly believe that the likes of JSW Steel and Tata Steel, for example, they should be up for at least another 15 to 20% on the upside over the next 6 months.
Okay. Okay, that's the take coming in on some of those metal plays and where there could be a contra trade. Right now, of course, the ones under pressure. Take a look at BEL, that's down about almost 3.5%. M&M Finance lower by 3.25%. RBL Bank is under a little bit of pressure. That stock is lower by about 3%. And then there's ABB, which is also down about 1.5%. Pashupati, when all this dust on tariffs settles down, is going to be back to basics, right? And soon enough, we'll have the earnings season as well play out. Where do you think this quarter one could see some positive surprises?
I think you'll see positive surprises on companies which have a lower tariff than people expect. That's for sure. And the second thing that will happen is that if there's any kind of a misbalancing and there's any kind of arbitrage opportunity in the tariffs, I think those companies who are able to take advantage of that will be winners. So, I know that there have been a number of institutions in this country who have been trying to set up conference calls on what to talk about tariffs. But then, till you get the rates, until you get it in black and white, you don't know what to do. So it's going to be, whoever moves fast will win the game.
Right, okay. That's the take coming in on where the meaningful surprise could come in really from. We've been analyzing what's been happening within the auto pack and how those monthly sales have been panning out. The big positive surprises have come in from a Tata Motors, from a Hyundai, from Eicher, RE, that is, not VECV. That was a little bit of a miss or inline at best. And then, of course, M&M, the farm division, has done pretty well. Pashupati, how is it that you're seeing this entire EV play, or rather EV transition play out for the SUV market? And would you sense that M&M would continue to win the battle here?
Well, out of all the Indian players, M&M has shown the most promise so far. However, you're seeing MG coming in pretty strong. You're seeing BYD, which is the strongest player in the world, which will benefit from the lower tariffs on EVs. And I think that EV market is going to get shaken up. So I would not be jumping in so quickly. And in fact, the real challenge in EV is the EV infrastructure, which we are pretty sadly behind. So, we had 10 million EV cars on the road, we wouldn't have enough chargers. So those are the kinds of challenges. So all the people are doing slow things to make it better, but it's not happened yet. So it's again, promise versus performance. And let's see how that goes.
Bajaj Auto is 1% higher, 8072. In fact, the dispatch numbers have not been bad at all. I mean, if Ashok Leyland does well, both year on year and month, then you say that, okay, the CV cycle is not bad. And if CV cycle is not that bad, means the economy is doing well. If economy is doing well, we should be in for some kind of a surprise now. Kunal, has State Bank of India disappointed? I think it was your call yesterday, right?
Yeah, day before.
Day before. I mean, it is not living up to its reputation. I mean, with this kind of a comeback in HDFC Bank and Kotak, I would have made a case that State Bank of India should be closer to 900, not 800, or even 1000 for that matter.
No, I think PSU banks in this leg has underperformed, Cochin. It's just that in the last 1 week or so, we've seen many of the PSU banking stocks trying to get their beta back again, or in the price movement in terms of high momentum back again. But I think there are a lot of hurdles on the way up for many of these PSU banking names. Now, I think almost 70%, 80% of the stocks in the PSU banking basket, they are trading sub their long-term moving averages. This compared to at a point where HDFC Bank, ICICI Bank, Kotak Bank, etc., they are trading comfortably above the long-term moving averages. So there's a lot of hard work which the PSU banking stocks have to do. At least maybe the first part of that repair work is now on the way for the PSU banking stocks. We've seen a 10% plus kind of a jump from the previous swing lows in the last 1 week, 2 weeks for many of the PSU banking names. I believe once we see a breakout of their respective 200 DMAs for these stocks, whether it's Bank of Baroda, Bank of India, Canara Bank, etc. Once we start to see at least 2 or 3 names from the pack starting to show signs of a breakout, I believe eventually the others will also follow. So potentially a very strong up move could be in the offing once these stocks break past about their respective 200 DMAs.
Okay, let's get in some BTST trades as well then on that note. Shrikant, what's on your list?
Yeah, so in that particular, like for BTST specifically, I would like to go with United Spirit, which is currently around 1430, 1435. Most of the mid-size companies, they are crossing their immediate highest levels after spending nearly 4-5 days. So United Spirit also is one of them, and currently it is around 1435. We are expecting stock to move towards 1500 and we can keep stop loss around 1395 for the same. The other stock which we like is from the power space, and in that we like SJVN, Satlaj Nigam, which is currently around 93, 90, 95, 93, 94. And here also I am expecting stock to move towards 98 or 100 sort of levels. We can keep stop loss around 89 for the same.
300, I beg your pardon, 3% higher for DLF. Now the real estate space is actually making quite a meaningful comeback. Let's look at real estate. Prestige is there, DLF is there, Oberoi Realty is there. The other one which is cutting out is Max Estate is also there. The other one which is cutting out today is cement. In fact, cement has done rather well in last couple of days. Kunal, I'll keep Ambuja aside. But the other cement stocks have been outperforming in this market rally, right? Shree is outperformed, Manglam has outperformed, I think Ramco has outperformed. Is it a valid observation that cement could be the new leader?
Yeah, so cement is finally waking up, I would say, because cement has been an underperformer in 2024-23 second half also. And, that too at a point where many of the stocks, I think except for Ultratech Cement, you hardly had any of the other cement stocks which were looking attractive. Yes, there were pockets where like India Cement moved up more than 50% to 80% in a matter of, I think, few weeks, months. But then that stock has also gone through a correction. But I think when you look at the entire basket, most of the other stocks in the cement space have been underperforming. Right now, again, you're seeing, that kind of a strong consensus move where you're seeing, many of the stocks within the cement pack. Shree Cement has been one of the stocks which was the first ones to hit a lifetime high and break past about the previous 2023-24 highs. Ultratech Cement is still underperforming on a relative basis in this last 2-3 months. But then when you look at the price comparison, the stock is, more or less given positive returns over the last 4 to 5 years on a consistent basis. And then you've underperformers like ACC, Ambuja Cement, which are also trying to make a comeback. So yes, there are signs where the leadership is coming back into the cement pocket, and this could be a strong, maybe a sector which could try and wake up after years of underperformance.
Okay.
Kunal, let's get in the BTST trades as well going before we wind up.
So I'll go with 2 buy calls. The first is one Container Corporation that looks attractive with a potential near-term target of 750. My sense is that the stock could, confirm a breakout of its 50-day moving average. Stop loss for this trade could be kept at 680 mark. And the second would be a buy on trend, something which I've been bullish on over the last 1 month. The stock has been doing reasonably well. Looks attractive now for a revised target of 6,000. Stop loss at 5,500.
Okay. What I learned, I want to share the price of Shree Cement in 10 years and the price of Ambuja in last 10 years. Let's look at it. 10 साल श्री सीमेंट खुल जा सिमसिम सिमसिम को भी समय लगता है श्री सीमेंट में ऐसा हुआ खजाने से ज़्यादा पैसा बना है No, I mean the graphic will just come up and we know the data
There.
3x and 15 years Shree Cement. No, it's something wrong here. How can it be 2,000, 10,000 becoming 30,000? No, something is wrong with the percentage there. It's not right.
There.
Yeah, there you go. It's up 14 times in last 15 years. And ACC during that time is up 2 times. Here's India's largest cement company. And here is a small cement company, not even in top 5. And cement is a commodity. Cement is supposed to be lacking pricing power. They did not acquire anything. They do not have that kind of an access what some of the biggies have. They don't have a port berth. But in terms of wealth creation, it has hit out of the park. 15 years, ACC Ambuja has just doubled. And they say cement ka ek hi color hota hai. It's a one commodity. But 2 commodity stocks, one is up 15x, other is up only double. Pashupati Advani, ये क्या हो गया? Shree Cement, not the best cement stock in terms of capacity, scale, skill, size. 15 times in 15 years. Ambuja ACC during that same time when India boomed, everything boomed, has only doubled.
Well, it's
a tough one, right? Even I'm trying to figure out ये क्या हो गया.
I know. And we are all old timers in the markets. At some point we bought it, we made profit, and then we sold it off. So now 27 times, maybe I made 2 times or 3 times. I mean, it was in just low triple digits. So hey, it moves on. So, it's kind of, I find it very difficult to go back into a stock after I've got out of it. And that's one of my failings.
There are some more stocks which have done very well in the last 15 years. So Which is the next Shree Cement, Pashupati Advani? 5 minutes and then we'll close the show. But that I think is the most important question. And I'm going to ask Srikanth also and Kunal also.
Well, come back to me. Let me 2 minutes to think.
No, I have all the time. I'll wait. You can think. For that answer, we are ready to wait for more than 2 minutes. Doesn't matter.
I think there'll be a new stock that will come out in a new sector, and it'll be totally new. Maybe it'll be nuclear energy. Maybe it'll be something else. But it'll be something new. I don't think it's going to be something that we're existingly seeing.
Cement is a 100-year-old company. It did not give any returns for a sector which is old, boring, commodity, no pricing power. The stock goes up 15 times. Okay, which is your big next Shree Cement?
I thought it's Srikanth's turn first.
No. You are in-house. Always preference to in-house.
Should be having the answer by now.
Nothing as such in terms
ये
of
सब dodge कर रहे हैं, क्या है?
years, yeah.
You guys are the experts. I am the
But
commentator.
it's not 100 years old. It was incorporated in 79. And 83 is when it commissioned its first plant.
No, as in the group Bangers, as in...
Yeah,
I
I'm
do
talking
know.
about Shree Cement.
Okay, cement, 100, my bad. I mean, 30 years old actually, now more than 35, 40 years old.
Yeah, 45.
My bad. I mean, it's a corporate group which is old. They're into textiles and all. Need to rebrush my financial history. Srikanth, your turn. You've got more than 2 minutes to think now. Next Shree Cement.
I think, almost all these stocks from the cement space, they are doing really well. Most of these stocks are forming either a breakout sort of formation or they are forming some long-term bottoms, like Ambuja and all. But in that, very quickly, if I have to select any one stock in which we can get quick returns, then in that we like Ultratech Cement, which is currently around some 30,000. Around it is around 11,200 levels. But from here, the stock can go to the levels of 18,000 or 19,000. That's my overall view. So Shree Cement, Ultratech Cement, even this one, Ambuja Cement, all are showing signs of a bigger consolidation. And then later on, we are expecting a bullish breakout.
Pashupati, your 2 minutes are up. Tell us what's the next Shree Cement. Any stock that comes to your mind from the existing pool? I know you said there is going to be something new from maybe nuclear energy or some new idea, but from the existing lot, what do you think?
I think it has to be some kind of a food distribution stock, maybe like Godrej Consumer or something like that, because our population doesn't seem to be slowing down, and the move is going to be from the unorganized to the organized sector in food because of all the standards. So I think it has to be a stock of somewhere in the food sector, maybe levers, but levers already high. Maybe Godrej Consumer. I don't know. This is a wild guess, and I haven't done anything in it so far. But you've given me an interesting idea.
Good homework to put your mind to. But great having you on the show, Pashupati. Thank you as always for your time. Kunal, Srikanth, we'll let you guys go as well. And I'm going to hand it over to Snehi for the closing trades.
Well, absolutely. Let's take a look at how today's trading session has panned out. And, no sign of any fears of tomorrow's tariff announcement, the impact that tonight's tariff announcement could have on our markets tomorrow. At least we're not seeing that kind of pessimism in the market today, because 0.7% higher is where we've shut shop today for the Nifty and comfortably above 23,300. So at least looking good from there. And so 170, 180 point uptick from the day's lowest points, looking very healthy on that front as well. Nifty 0.7% higher, Sensex in tandem slightly higher than that, 0.8% uptick coming in on Sensex as well. Broader markets have held on very smartly in today's trading session. They've also contributed very positively to today's gains. Mid cap is up 1.6%. Small cap index also not doing all that bad. In fact, doing pretty well today. 1.1% uptick coming in the small cap space today. Nifty banked to 1% higher today, so looking very good across the board. Advance decline ratio in the favor of the advances today, so the breadth of the market also looking pretty healthy. Sectorally, let's take a look at some winners and losers. In fact, everybody was a winner today. All the sectors have ended today's trading session in the green, and the biggest loser yesterday, Nifty Realty, was today's biggest winner. So you have Realty, FMCG, IT, Pharma, Auto, Bank, Metal, Energy, Media in that pecking order. Very quickly, just running you through some top gainers in today's trading session. Paytm, on the back of its partnership with the Hyderabad municipal body, is doing very well. Bharti Airtel expands collaboration with Nokia. Glenmark Pharma, new launch coming in. On the flip side, BEL has missed its FY25 target guidance, so that stock did not do well today. CSB Bank doing very good. Value retail stocks have done very well in today's trade on the back of brokerage notes. Dixon, HUL, Tata Consumers and Nestle, all of them were in focus today. But that's how we've wrapped up today. A quick wrap on today's trading session. Looking good at least today. Let's hope we can hold on to some gains when the tariff announcement comes in later tonight and the impact is seen on our markets tomorrow. But nonetheless, all's well that ends well, at least for today, because we've closed firmly in the green today.